Hello Ireland, my name is Bindu Nair and welcome to yet another episode of Mind Studio. So, let me ask you, have you ever felt stuck when it comes to financial advice? Be it buying your new home or making smart investment decisions in Ireland? Well, today at Mind Studio, we have here with us Manu, who is a qualified financial advisor from Finance Choice. Manu, welcome to Mind Studio.
Thank you very much. It's great to be here.
So tell us, Manu, Finance Choice, where are you based and what are the different categories that you provide financial advice in?
So Finance Choice is the approved intermediary of Central Bank of Ireland. We are based in Blanchardstown, Dublin. We actually deal with insurance, term life, income protection, mortgages, pension, and investments.
So let's start with life cover. Explain to us in simple terms what it means and how is it important for families in Ireland?
So life cover is an important financial arrangement where it's considered as a backbone of a family's financial well-being.
Right.
And it actually supports a family in the event of unfortunate death of a spouse or a husband. Mm-hmm. It actually pays that whole tax-free lump sum to their family, and it actually takes care of the bills or expenses for the rest of the life.
Okay, so it is tax-free for the family. They can
it is tax-free.
Tax-free, and do they get it on a monthly basis, or is it a lump sum that they get?
It is a lump sum that they get it. Yeah.
That they get in the event of the death. And at what stage of life would you recommend, as a financial advisor, that it would be good for someone to start this to start taking the life cover?
I would say it's as early as possible. For example, early as early 30s or late 20s.
Early 20s,
yes.
Okay. And what would be the premium that you have to pay on a monthly basis?
You can start it as cheap as €10 per month, and you would get a life cover of €100,000.
Okay. And the €10 for how long will they have to?
It depends on the tenure of the term. Like, for example, you can start for 25 years or 30 years. Ideally, you need to have life cover until your retirement, 65.
Okay.
Yeah. So it depends on your age.
Okay, so you start at 30, you pay until the retirement.
Yeah.
And is there any point that you can stop payment and still withdraw the benefit will still remain because you've paid for such a long time?
There is no guaranteed lump sum that is paid back to the customer.
Okay.
It only pays when a person dies.
Okay.
Yeah.
Okay. So let's move on to the next product that you mentioned about, which is income protection.
Okay.
Talk to us more about income protection and why is it important to take income protection?
So again, income protection is another important tool for a family's financial well-being. So whenever you fall sick and you cannot work as in your profession that you were working in, income protection starts kicking in, and it pays you 75% of your income, whatever you were earning, minus PRSA. So the way it works is you are entitled for €252 of your state illness benefit. So if you fall sick, you only get that as a benefit from the state. And then you'll be left with your bills to pay, mortgage to pay, and other utility bills and stuff. And you wouldn't have any money to manage those bills.
Right.
So that's where income protection comes in. Yeah.
So give us a real life example of how does income protection work. For example, if someone is working in the HSC and they are sick, so how does the income protection kick in?
So we had a recent example, like we had a client who actually took out income protection in 2022. And in 2024, she met with an accident and she has a permanent condition with her shoulder. She cannot work as a nurse. So in this case, HSC actually paid her the first 3 months full pay, and the next 3 months was half pay for her. And then on the 6th month, income protection started kicking in. So she has been getting this income protection benefit for the last 2 years now.
And how long will this continue? Until she joins back work, or for how long will the income protection continue for this particular example?
See, in the event of a person getting terminally ill or permanently ill, that she cannot go back to work, it'll keep paying you until your retirement age.
Okay.
For example, of a nurse, it actually pays you till you're 68 years of age.
Okay.
And if you are able to go back to work, then it stops paying you. Yeah.
Okay, so at least it will be there until the individual needs it.
Needs it, of course. Yeah.
Very good, very good. And then, so that was about an employee who was in the HSC. Let's say if they have a private employer, how does this work? Because the statutory sick leave is for 5 days. So how does this work? How does income protection? What time does income protection kick in at that in that scenario?
So for a private employee, we would actually recommend a waiting time of 3 months. For example, they stop getting their pay at the 5th day of their sick leave. So they would actually ideally need their income protection as early as possible. So ideally, if they start with a waiting time of 3 months, income protection will kick in on third month, and it'll keep paying them until their retirement age if they're not going back to work at all. Yeah.
So it will, for someone who has, so the income protection will kick off in 3 months for this second example second example. So they will be with no income, or they have to use their savings until those 3 months.
Until those 3 months. Yeah.
So basically what you're saying, Manu, is that if for those individuals who avail of the income protection, so from a family perspective, it's a great way to protect their family in terms of income. Other than that, because they'll have the mortgages, they'll have their day-to-day expenses as well. So the income protection will help them cover those until the time that the individual can go back to work.
Absolutely.
Okay. So tell us, how does income protection link in with mortgages?
So I would advise my customers to start with the income protection before even they think about mortgages. So at the end of the day, your income is your biggest asset as an expat in Ireland. So if you do not have your income, you cannot actually keep up with your mortgage payments.
Okay.
And bank would not look into a scenario where you can't pay your mortgage payments due to your illness. You are bound to pay that, or else they repossess your house.
Okay.
So without income protection, you are no longer able to sustain your mortgage payments. Yes.
So because usually with mortgages, your income protection has to be taken. But what you're advising is that you start your income protection early
first,
and then you apply for the
There is a reason behind it, unfortunately. Like,
very good.
If you have a certain kind of illness, or for example, diabetes, that's a red flag for income protection. If you have a diabetes, you do not get your income protection approvals.
Okay.
So it's better to take income protection when you're healthy and fit, and as early as possible.
As early as possible, and then it will become easier for mortgage. Fantastic,
yes.
Brilliant. And is it income protection from different banks? So how can you help individuals who come to you for income protection? What do you do for them?
So we actually deal with almost all the major insurance companies in Ireland.
Right.
So income protection is a format which is supported by many insurance providers.
Okay.
So we deal with all of them, and we can get a better rate when whatever you find online or with any provider directly.
Okay.
So that's how we support income protection customers. And of course, we do support when it comes to a claim, we do the claim handling as well. So that's how we support the customer. Yeah.
So rather than going here, I'll get a personalized service. If I go to a bank, I need to get through the bank and do the regular thing that you do. So if I get it from Finance Choice, you are there to get the best rates, but also if in case of a claim, you will be able to help us out as well.
Absolutely, yes.
Brilliant, fantastic. That's actually very reassuring for families who go through such scenarios. Okay, so let's move on to the next. So the next product that you mentioned was pensions.
Yes.
It's depending on what stage of the life you are, it's an interesting topic for everybody.
Yeah.
So now let's talk about pensions.
Okay.
So how early should someone start investing into pensions?
Ideally in their 30s. Again, based on your priority. Like once you're sorted out with your mortgage, you can actually start pulling your money into pensions.
Right.
I would describe pension as most tax efficient way of saving in Ireland, because whatever you save in otherwise is liable for taxes. There are capital gain taxes, exit taxes involved when you actually invest or save in Ireland.
Right.
But then pension grows tax free.
Right.
So you can start your contributing into your pensions at the earliest possible, and in your 30s ideally, yes.
In your 30s. Very good. And if, let's say, you weren't there to advise someone to take pensions so early, let's say if they are in their early 50s, is it too late for them to start investing in the pensions?
Not at all. They can actually pool like a lump sum contribution, and they can earn their tax benefit on that.
Oh, okay, very good. And the government recently introduced a new scheme called the auto-enrollment scheme with pension. So talk to us about it. How does it work for employees?
So auto-enrollment scheme is defined by few ground rules. It has to be within the age limit of 20 to 23 minimum. And it is for people who are earning 20,000 or above. And there are some flexibility terms involved when it comes to putting your money into auto-enrollment scheme. It's always better to go by your employer's pension scheme if you have one available. So if not, you can actually putting your money into auto-enrollment scheme. Yeah.
Fantastic, brilliant. So let's talk about mortgages now.
Sure.
So we all know that the house prices are going up in Ireland, and also there's a lot of demand for houses in Ireland. So tell us, how early should somebody start preparing financially to apply for a mortgage? Even though, let's say, there's a year in terms of them buying the house, how early should you start preparing for it?
Ideally, 2 years prior starting your mortgage plan, you should actually talk to a financial advisor. There are certain patterns that we see in statements,
Right.
and which can be a mistake when it comes to preparing yourself for a mortgage.
Okay.
So ideally 2 years prior. Yeah.
And what would be the key aspects? What would you be really looking on in the statements or in the financial statements that they have?
So the first thing in the conduct on the account, the way how individual spends their money.
Right.
So there cannot be much spending spree on the statements, and there should not be any trading. You should not see any red flags like trading or lottery. And ideally, they should be showing their proven repayment ability. They should demonstrate the history of it at least for 6 months. That is what the bank's underwriter would look into it.
Would look into it. Okay. Yeah. And what is the biggest barrier for mortgage approvals?
So what I've seen of late is people are sending money abroad. So this actually demonstrates as a liability. If you're actually regularly sending on a particular date, it actually shows a pattern of liability.
Outside of Ireland.
Outside of Ireland. So another one would be not showing their proven repayment ability. Again, you should be ideally regularly saving at least a minimum amount that is expected.
Right.
And which actually shows your proven repayment ability to underwrite it. Yeah.
Okay. And these days people use Revolut as well. So it's not just your bank account, so you have Revolut as well. Does that come into play?
It does. If you're actually using your Revolut account for trading, it is a big red flag.
So we've all heard about switching mortgages. So tell me, is that something that you would recommend to your customers, that they should switch mortgages?
Absolutely, it is. In Irish market, it's always good to switch your provider because it actually offers you a bit of savings.
All right.
So when it comes to mortgage switching, so if you are actually switching into a lesser interest rate, you would be saving up to 250 to 300 euro monthly. Yeah.
Oh, brilliant. So, and you can... Is there a limit on how many mortgages you can switch? How many banks or providers that you can switch?
There are no limits as such. So CCPC is a board that regulates financial products. So that actually allows you to switch n number of times during your term of your mortgage. Yes.
Brilliant. And if a customer would come to you, you would guide them as to which is the bank that provides you a better interest rate.
Interest rate. We actually do a market research and see what best actually suits the customer in terms of interest rate and good saving opportunity.
Well, that is fantastic. That's brilliant. So we spoke about income protection, and mortgage protection is also required whenever you're applying for a mortgage. So talk to us a bit more about the different covers that are available within mortgage protection.
So again, mortgage protection is one mandatory element that when you take your mortgage.
Yeah.
There are two types of cover available in the market. One is the level cover and the second one is the decreasing cover. So the decreasing cover, the way it works is the value of the cover will decrease as you pay your mortgage off. And the level cover actually ensures two payments. So in the event of a death, it actually pays a lump sum amount to the partner. It actually clears your mortgage as well. So I would recommend my customers to go with the level cover first.
Brilliant. So final question. Why should I choose Finance Choice rather than going to the banks?
So as I mentioned earlier, Finance Choice is a central bank approved intermediary. We actually deal with all the 7 lenders in the market and we deal with all the insurance providers. So what we do is actually we cut a good rate in terms of insurance products, and with the lenders, we actually do a fair research of market and just choose the best banks that suit your mortgage needs. And we can actually assure the best rates available in the market when it comes to insurance products. And we also guarantee the support in the event of a claim. That's how we work.
So best market rates is what Manu said. So well, Manu, thank you very much for being here with us on Mind Studio. Thank you so much for those brilliant tips and advice on the number of financial products that you have. So thank you for being with us.
Thanks for having me. Thank you.
So until next time, stay connected with Mind Studio.